I want to turn toward energy. This is obviously an industry I'm very passionate about and have been, I think convinced is going to be disrupted, and that conviction has really only been increasing. As we were saying at the outset, I think it's incredibly misunderstood, even by insiders within the industry, of like how this disruption is likely to pan out. And energy, even as a term, I think is probably misleading, because it's such a huge sector. You got, the oil and gas majors, then you've got like the utilities, and then there's separate companies that maybe do only generation. So if you wouldn't mind, maybe just take a step back and kind of lay out at a high level some of the major trends that you see kind of occurring within this energy space, and maybe how that translates into some investment theses for you guys to learn.
Yeah, for sure. I mean, Matt, I think you're super educated on this subject, so I would love to ask you questions as well. I don't want to own this.
Yeah, let's make it a conversation. It's It's an interesting topic, and I feel like I've got very few peers out there that really, have the same view as me. So I'd love to just kind of free-flow this.
So I suppose if we want to take a step back, I think the big disruption that unfolding, the way to frame it and how we frame it in terms of our own investment process is the energy ecosystem is shifting from an extraction-based system and an extraction-based model to one of collection, storage, and distribution. Those are really the three elements of the new energy paradigm. And the key difference really starts with collection. So we think the future, and I think it's already kind of present, is the future of collection of energy is really primarily through solar and wind, and then storage through battery assets. I think that broadly speaking, it's going to be one of the biggest deflationary forces, not just on the energy ecosystem, but the broader economy as well, as many of those cost savings trickle down into other elements of the economy. And I think that this is a huge disruption for the oil majors and many other business models that are pegged to the sort of old world model of extraction. So we, in our long short strategy, we have certain positions that reflect this belief, that we think many of the fossil fuel related business models are destined for obsolescence. And that's not just the oil majors, but I think that there is increasingly the risk for companies like even auto dealers that can transition their business models away from combustion engine vehicles. But big picture, I mean, it's a disruption that I think can be extremely value accretive for individuals. It's in that sense, I did a podcast with Mark Campanelli and Kingsmill Bond of Carbon Tracker. And I really loved how Mark framed it as really a disruption that will lead to more democratic freedoms, because it will enable more people to just have access to free power, free electricity, all through the local collection, storage, and distribution of energy. And so I think this is like the I don't know, the elephant in the room that maybe a lot of investors don't really want to talk about, or don't want to dig too deeply, or they just look at oil prices as an indication of, kind of what the market is feeling. I think that the fact is that extracting oil and using it for the production of industrial systems over the long term will no longer be a way of actually generating sustained economic growth. I think you'll increasingly see renewables take the place of fossil fuels. And so this sort of a disruption creates a lot of opportunities. I mean, there's a lot of chaos in this. There's, some really out there kind of ideas, which we can get into, around virtual power plants. And, I know that I think you've read my interview with Tony Seba, and he talks a lot about sort of the marginal costs of energy approaching zero, and the new types of business models that can evolve off of those platforms. So those are areas that we're pretty focused on. But I think, if I was sitting in a room with a bunch of other, investors with truly, 30-year time horizons, I think our message would be, just get out of fossil fuels, leave it for the speculators and day traders, because there will be volatility. And for sure, I mean, if it's a short-term play, I could see, some of these companies, getting a pop 20%, 30%, 50% here and there. Certainly saw it with Amazon's disruption of brick and mortar retail. it's kind of a similar dynamic in some ways, which is some of these businesses may face obsolescence, but in an economy, in a world with low interest rates, and up until more recently a pretty compliant Fed, bad business models can stay around for years with relatively low cost of capital and access to liquidity. So, but the big picture is, I mean, if you have a 30-year time frame or even a 10-year time frame, we would avoid fossil fuels like the plague.
Yeah, a lot of themes I want to pick up on there. Maybe first off, just on the kind of investor base that is still invested in the oil majors, or to some degree some of the utilities which aren't adjusting their business models in a way that I would view is required to kind of adapt to this disruption. My sense from talking to a lot of shareholders across various companies is they don't want to necessarily make the changes that are needed to stay relevant or to adapt to this, because to do so would require cutting the dividend, or making drastic changes to the CapEx plan. And a lot of these investors have what they would state is like a very low risk appetite for that sort of thing. So I think in a roundabout way, this kind of preference for low risk returns and kind of like a steady dividend yield is probably pressuring management of these companies to avoid taking on the changes that would ultimately save them. So I'm curious if you've seen kind of similar behavior from shareholders who, honestly, it would be in their best interest to like cut the dividend, drastically reallocate capital, shift toward R&D, and like drastically change the business model, but they're I think incapable of handling that change. Is that similar to what you've seen?
Yeah, look, I mean, I think that this is just a case study of disruption 101. The incumbents failing to adapt is a natural consequence of short-term incentives, long-term incentives, just how organizations are structured, how quickly they can move. So I don't think that it should be too shocking that some of these, big oil majors, and frankly, we can even talk about some of the OEMs, the combustion engine, car manufacturers, they are incredibly slow to this transition, all while doing, a lot of greenwashing campaigns saying that they are making the transition and, putting pictures of windmills on their websites. When in reality, like the percentage of CapEx spend on renewables is tiny, and it's not actually going to move the needle. And from like an investor perspective, just the feedback that I've received seems to be, well, a lot of these oil majors, their share prices have really declined, and that's a reflection of the market pricing this. So it's now priced in, and so it's upside from here on out. And I wonder how you can really believe that if you really, to me, that's like a shocking perspective that I've heard multiple times. And I think that could really get a lot of institutional investors hurt over the long term. I mean, my mom was a retired school teacher. She's lives off a pension. And I just look at some of these pension funds, and they're just horribly positioned for the next 20, 30 years. And so I think that the definition of risk is the percentage chance that you lose your capital. And so to me, it's shocking that any oil and gas company would be viewed as less risky relative to a renewables company, simply because the share price has declined over time. So I don't know.
Well, I think that's your definition of risk is different than what these portfolio managers are using, though, because portfolio managers will use beta, which is essentially just a backward-looking kind of variance of historical share price to an index of other stocks, and say, okay, well, yeah, look, my oil major has a beta of 0.5 or whatever, so it's not risky and it's got a great dividend yield, and so that's driving the kind of these risk decisions, which is kind of horrifying to me when you're kind of chasing pennies when you're risking your entire dollar by looking at risk that way. So one of the other things that I think a lot about, going back to what you said originally of a lot the extraction, or said another way, the value input of energy is going to be shifting away from kind of physical extraction, from oil and gas, and more toward, renewables, which is, wind and solar. And that's electricity. So, I think if you look at the implications, if you really do believe that thesis, there should be a huge increase in both demand and supply of electricity going forward, which does create, I think, a lot of opportunities for winners in kind of the electric space. But the other thing that I think is different about this industry that few people really understand is it's not like Amazon coming in, or like any of like the tech companies coming in, where there's just like this wave of software that you can replicate very easily and it takes market share quickly, and the disruption is done in like 2 or 3 years and everyone adapts. I think in the energy space, both kind of physical extraction like you're talking about, but also power plants and transmission and distribution lines. These are long-lived assets. These are 30-year useful life types of assets. And there's, even as aggressively as you want to deploy them, I mean, you can only turn over a very small percentage of the kind of total generation each year. So I think you're seeing this disruption play out, but it may be on a day-to-day basis, doesn't look like it's happening very quickly. So is your view that that's the same sort of thing, that this is going to, like, I think I've called it in the past, like a slow motion train wreck that's going to like take a decade to like pan out. So is your thought that it's gonna be this kind of slow, steady transition, and it's just gonna gradually become less, cash flow positive for firms to operate the way they used to, and eventually they'll wake up one day and be like, oh shoot, we don't have a business anymore?
I think in some cases it could be some version of that, but I do think that there is a potential for even a more extreme scenario in which you have the stranded asset risk of a lot of the existing infrastructure, that from an accounting perspective, you start writing it down more quickly than maybe creditors or the market actually believed would happen. And so there could be sort of a toppling effect just from an accounting point of view if you start writing these things down more quickly. So, I don't know exactly how this all exactly unfolds, but I do think that it is a domino effect that all starts, like the first domino really starts with, the upstart here. And in this case, it's just the improving cost and efficiency curve of renewables. And so once it reaches that threshold where, the dominoes start flipping over, it can happen very quickly. And so I'm not saying that, suddenly, we're all using solar panels and batteries in our garage to power our homes. But what I am saying is that from a financial modeling perspective, the market may write down some of these oil and gas and utility companies much more quicker than investors believe. So, some of them may even have negative value because of the amount of, externalities that they're forced to clean up in the future. So, that's already starting to be part of the conversation. And so it's unclear exactly how it unfolds. I think though, from like a, long short thesis perspective, it's a wonderful time to be picking, spots here, because that's what creates opportunity. I mean, we are no longer living through an era of, this isn't the 1970s and 1980s of just stability and all, the conversation would just be around like the relative price of oil. These are much more fundamental questions about the utility of oil in a post-renewables world. So, there's a huge amount of wealth tied up in certain sovereign countries pegged to the price of oil. What starts happening? What are the second and third order effects of declining oil price? I think that there could be some significant global economic event as a result of being out of position and sort of frankly mischaracterizing the impact of the renewables disruption. I think that your listeners, I'm pals with the guys at Carbon Tracker, and I think that they put out some really great research on this. And so anyone who's curious,
that was a great podcast you had with them too. I'd recommend anyone check out the Nightcrawler podcast. I think it was last week you put out that conversation with them.
Yeah,
gives a really good overview of some of these trends.
Yeah, they're really on the front lines of this, and speaking with institutional investors and oil and gas companies, and I would say that they are sort of ringing the alarm bells that a lot of these oil companies are not making the transition at all, and they and their investors could end up getting pretty hurt in this transition. So check out Carbon Tracker. They're a lot smarter than I am on this issue.
Oh, I want to take a minute to talk about the grid in particular, because I think it's very easy to kind of see these macro trends, but I think the implications of how this can pan out are relatively nuanced. So you talked a lot about wind and solar having a $0 marginal cost, but I think from my perspective, as someone who used to be like a wind farm operator, essentially an asset manager for a wind farm, the cost structure, I'm very familiar with like how much it costs to build these and kind of what you need in terms of getting them financed. And even still, the thing that surprises me is like, the cheapest renewables, or even I should say it another way, the most expensive renewables, might be, 3-4 cents a kilowatt hour, which is still cheaper than like the average utility generation rate. So you mentioned earlier, renewables as a deflationary force, and I absolutely believe that's the case. So you've got current pricing for some solar farms being in the 1.5 cent range per kilowatt hour, and that's competing with 4 cents on a lot of legacy utility generation.
Yeah.
The other issue I see with kind of legacy utility business models is that they're based on this kind of rate-based model where essentially it's a they take the balance of all their PP&E and then apply a rate of return or return on equity on that, and then build up all their costs from there. So what it essentially boils down to is like a cost plus methodology that really kind of encourages a lot of spending on CapEx and a lot of O&M costs that are just going to get passed on to the ratepayers. So kind of given that background of a lot of these companies that are still operating legacy coal and natural gas plants at very expensive rates, and then this kind of confluence of decreasing costs for solar and wind, I think even within the electricity space, if we agree the overall pie is going to be expanding because it's taken away from the oil majors, I think even within that space, there's probably going to be some huge losers and maybe just a couple of really big winners that are kind of able to manage those costs most effectively in the long term. Have you thought about kind of how that pans out within the utility space and whether some of those incumbents are at a disadvantage as well to manage this transition?
Yeah, I think so. I think you're absolutely right that it's in some ways easier to identify the losers than it is to select the winners. And I think there are many SPACs today that would identify themselves as the winners of the energy disruption. But I think
there's a lot of those. I was looking at a list of like all the like battery SPACs out there, and it's like astonishing how many there are.
Yeah, I mean, we obviously try to avoid any sort of landmine out there, but we take a look at everything. So it's been fascinating to see sort of how the market is pricing these, and that may change over the next few months, quarters, years, whatever. But as far as I think like the potential for the utility businesses to be kind of disintermediated, I think it's possible long term. And I mean, I think if you approach this with like a first principles perspective, what sort of value does a utility provide in a totally decentralized grid universe? Maybe not much. Maybe certainly not as much as they're providing today as your local coal operator or natural gas peaker plant, right? So I think obviously Tesla's been working on some of these problems with Megapack and just the large scale battery integrations and auto bidder. And so I think that you can point towards what Tesla is doing as being a potential winner of this transition. But I think like from a utility perspective, yeah, there's going to be some protect and defend. They're certainly not going to want their businesses to be disintermediated, and I think you may find regulations popping up, to prevent these sort of like local off-grid or just individuals harvesting their own energy. Certainly, I think like an interesting endeavor is vehicle to grid, sort of power transfer, but That's really early. We certainly haven't reached a certain level of scale of electric vehicles. But bigger picture, in a lot of ways, I mean, just going back to the cost curve of renewables, it's also, you have to apply that same cost curve across all industries. So if you think about, well, what are the input costs to even make those wind turbines, and could costs go down as a result of shipping going all electric and trucking going all electric, and the extraction of the metals to create those wind turbines, which gets a lot of sort of criticism. Could those costs go down over time as a result of the renewables transition? And so, we're living in a sort of, I think, environment where inflation is like on everyone's minds, and maybe deservedly so because of some price upticks that we've seen more recently. But longer term, if you really sort of grapple with a likely outcome of the energy disruption, I think you tend to believe that the probabilities of a deflationary future are much higher than an inflationary future. And so, I think that like the through both energy disruption but also automation, I think we're going to see a huge amount of deflationary pressure on the economy, which is really, I think we'll have maybe different problems to deal with when that's the case. But one that I think is really fascinating to study with energy in particular. I don't know. What do you guys think about that? Am I thinking about it similarly to you guys, or it sounds like we're generally speaking the same language here?
Yeah, I think so. I mean, it reminded me a lot of what, Tony Seba says about if you can kind of imagine that just with solar and wind and batteries, you got to kind of factor those in, which makes it a much more tricky kind of math problem to solve. But if you can imagine that those costs are declining most rapidly, then you will presumably have a future where marginal cost of energy approaches $0. And so if you essentially overbuild your solar and wind, which you kind of have to do in order to overcome the the fact that it's interruptible. But essentially what you would get is a scenario where during most hours of the day or in vast periods of the year, your energy is essentially free. And so you can imagine all of the or close to it for all intents and purposes. And I don't completely buy that philosophy, but I think the theory holds. And so maybe it's not free, maybe it's 1 cent a kilowatt hour, something like that. So drastically cheaper than current kind of as delivered costs are today. And in that scenario, the economics for all sorts of companies would change. I mean, when I was doing investment banking, we were working with this company that sold like metal abrasives, and they would use like their single highest cost item was electricity, because they were using huge amounts of it to melt metal. And that's a rather obscure area to pick on, but you can think of like some completely industrialized thing that seems like it shouldn't really be impacted by disruption in the energy industry, but their entire financial profile would change if that were to happen. And then they can pass on their lower input costs to the end customers who use their products to clean bridges that are rusting and that sort of thing. And so I think the major takeaway I do agree with is that it will be this kind of huge deflationary force, where energy cost as a percentage of total GDP. I don't know what it is right now, but I could see a path forward where it's half or a quarter and then decreasing over time as the marginal costs go down. And then what we can do with that, I mean, it goes from just kind of a cost thing that's a pure cost and a kind of a drag on the economy to physically transport oil and do all the things that are needed right now, that frees up all those resources to go and pursue more productive things for the economy. So I do think it's a huge net positive if we can kind of get to that state where there's very low marginal cost energy that's kind of abundant and close to free for everyone.
Yeah, and then the Tesla bot in there too, right? And then that's why the cost down for everyone. You can automate.
I think.
Yeah.
I think the deflationary pressures are real. We've taken up a lot of your time, but I did have one other point on the energy space I kind of wanted to dive into, which was the transmission and distribution costs, which I think a lot of people don't really take the time to think through. But in my mind, you've got the cost of solar at, call it 2 cents or so on average. It'll vary location dependent, and whether it's, rooftop or, commercial and industrial scale. But so you're going to kind of undercut on the generation, but then the transmission and distribution, like for a residential customer, that's like 7 or 9 cents. So it's multiples of the actual generation cost. Yeah. And so it's hard to imagine there like not being a grid in the future. So, I don't necessarily think that's going to be the future, but at a minimum, it seems like it would encourage a huge shift where there's much more decentralization. So, way more homes have at least a solar panel, and maybe it's not all their, solar is, or all their electricity needs are met through that, kind of distributed resource. But it seems like it would be good for the economy overall, and good for self-interested investors to have that resource as close to the generation resource, as close to the point of kind of consumption of electricity as possible. And then that creates, I would say, a risk of kind of stranding some of these transmission and distribution costs, or otherwise some sort of major change in the way that they're kind of billed, which I think is another kind of risk for utilities. And then you can imagine if those costs kind of spiral high enough because people are opting out of the grid, or if there's fewer electrons kind of being transmitted that way, then maybe the economics of batteries are even better. And so it kind of perpetuates this death spiral in that situation.
I agree with all that. I mean, I wonder if like a good mental model or corollary that I've thought about a little bit with this is, sort of how digital streaming ushered in a new era of like cord cutting, in which cable still exists, right? There's a legacy cable business that still makes a lot of sense, but increasingly customers are going to choose, their preferred streaming platform. They have a little bit more choice. And I think when I think about sort of the future of localized energy, I think that maybe there's a bit more of a consumer choice inherent in this disruption, and that people can choose to put solar assets up on their house. Maybe there's a co-op in their local community that they can buy, excess electricity from, or maybe they choose to stay connected to the local utility. I think that utilities are, for better or worse, effectively monopolies, and I think that one of the first signs of their slower demise, certainly slower than some of the other business models we've talked about, will be just an introduction of competition. And I think you're seeing it, with solar panels on people's homes. Maybe, you'll see it more in terms of like a co-op type of model. It feels very early to me. I don't know what necessarily the future looks like. I completely agree with you. I think that like the transmission cost element is not particularly well understood, or even I don't entirely understand, Grok, exactly how those cost inputs affect the final price that you pay. It's like a little bit, I guess, convoluted, and I think maybe intentionally so.
Yep.
You did investment banking on this, so you probably know the models much better than I do. But suffice to say, I think like the models are changing in benefit of the consumer finally, which is healthy. I think that to me it strikes me as a little bit crazy that you just wake up to an electricity bill every month or two, and you have no idea what it's going to be. And during the summer, that's a crazy load. It's a lot more expensive. I think over the long term, the decentralization of the grid will moderate some of those costs for consumers, and could fundamentally threaten sort of the utility model. I think that's a longer type of disruption that will play out. I don't think that's nearly as immediate as maybe the transportation disruption or digital streaming. But over the long term, absolutely, I think it's totally decentralized and localized.
Yeah.
One question I had for you, Eric. I've been letting you guys kind of nerd out on this energy stuff. It's beyond my expertise personally. I'm glad to learn from you guys. What are your thoughts, just on a little bit of a tangent? Crypto, Bitcoin is a big theme today in investing, or the investment world, and Bitcoin mining. There's been energy concerns around that. What are your thoughts on that? Do you think it's going to be a major, use of energy in the future, or do you think it's going to change the direction of the energy business going forward in some way? I mean, do you have any kind of thoughts on that, or is it sort of just not really an issue? It's not really a big issue.
I know that there's some companies working on this around trying to like aggregate renewables and, buy up Bitcoin mining facilities. I don't have like a particular variant perspective here. I don't have like a hard viewpoint on it. I would say though that when I started my career as a business journalist, I wrote a lot about Bitcoin and Bitcoin mining in particular. And, this was back in like 2012, 2013. And they do take up a ton of energy. And I'm not really sure like, how scalable it is. I mean, I know with, as it becomes incrementally harder to mine for Bitcoin, you have to use more energy. It seems a little bit crazy to me. Like, and I don't know if it would ever like freeze up the entire grid, but the stats that I've seen are probably similar to the ones that you've seen. And it's pretty nuts how much energy it uses. It doesn't seem particularly sustainable.
Yeah.
So
and it seems like the Bitcoin miners are basically competing. I mean, maybe I think the way I understand is the Bitcoin miners are competing with each other to find the next block. And as the Bitcoin price goes up, there's more incentive to dedicate more energy to Bitcoin mining to compete for those, higher priced Bitcoin blocks. And so, it's not, a linear correlation, but there's a definitive, it seems like correlation with the price of Bitcoin. I mean, it rose pretty fast to 60,000 initially, like January of last year. And then, China's banned Bitcoin miners since then. But if the price was to rise suddenly again to like a few $100,000 per Bitcoin, I would think that, the discussion of energy use for Bitcoin mining would become a much bigger topic. But, I don't know for sure.
Or maybe like Bitcoin miners will become renewable energy savants and figure out a new way to mine energy from the sun so that they can pay their own costs and become more profitable.
Yeah.
I think in their own minds, they already are renewable energy savants. It's like,
ask any Bitcoin maximalists, they'll tell you that's already the case. What are you talking about?
Yeah, well, I've been listening to these interviews and like, there's a lot of these, Bitcoin maximalists out there that say, oh, like it's in their incentive to find the lowest cost kind of like stranded energy assets out there. So, it's going to be a deflationary force for energy because they're going to, get all like they're going to incentivize everything to go towards renewable. And I'm like, no, like, Econ 101, like you're drastically increasing the total demand for electricity. And, these low cost providers would have simply sold into the grid and all the other customers would have been able to take advantage of low cost energy. Like with how slowly we were talking about earlier, how slowly new renewable generation is added to the grid, like it would take a huge amount of time just to kind of absorb the new demand that you laid out in the beginning from kind of oil majors losing demand and that, going to EVs and, kind of other transportation use cases that are going to be electricity based rather than, liquid fuel based. That's a huge problem already just to kind of get renewables up to meet that level. And then if you start adding, new layers of demand on top of that, it's just going to delay how quickly we can kind of deploy renewables to meet the existing needs.
Yeah. Yeah, no, I totally agree.
I'll get off my soapbox, but it's like, like Bitcoin cures cancer in a lot of people's mind. And it's just it's like, well, you got to think through this a little bit more deeply.
No, I remain agnostic, open-minded about crypto. We don't have a position either way other than how it's expressed through our holding in Tesla.
Yeah, I am. So maybe one last thought to round it up is, Tesla does seem to be really well positioned to take advantage of these. I mean, from being a provider of kind of distributed, energy resources, which I think we both agree is going to be a bigger part of the grid going forward, to being able to aggregate those and offer them into a VPP just with kind of the scale they have of a virtual power plant. And then, also their use of artificial intelligence to, kind of take advantage of price signals in real time, which I can tell you the legacy systems, can't really handle that. I mean, most of the offers, if you run a natural gas plant, you just take your cost of natural gas and you multiply it by kind of the implied efficiency of your power plant, and you know exactly how much it's going to cost for you to supply electricity for tomorrow. And so they kind of bid in statically that way. But I think there's an opportunity for real kind of dynamic real-time pricing, use of AI in 5-minute increments or even shorter to kind of optimize in a way that these legacy companies just aren't structured to handle. So what's your thoughts on Tesla Energy and is it impactful in the next 5 years? Is it a longer story? What's your thoughts?
Yeah, I mean, I'm hugely optimistic about the potential there. I think like the projects that we've seen out of Hornsdale, Australia, are really indicative of what the future may hold. I think the fact is that they're just supply constrained with batteries right now, and I think that the more facilities that we can build to build out, just the capacity for whether it's LFP batteries. I'm guessing it probably will be LFP batteries, but I think that we haven't really even scratched the surface of what this business could be, and I think that's probably intentional right now because all efforts have been basically focused on getting Model Y ramped up. But when that shifts, I think, going back a couple of years now, but Elon's point that energy revenues could one day eclipse automotive revenues, I think about that, and I think about what would have to happen for that to be the case. And, I suppose it is possible, especially if there is a recurring revenue model via AutoBidder or some other new platform that's being built right now. So yeah, I'm hugely optimistic about the energy business. And again, I don't think it's meaningfully priced in today. I think over time, though, it could be a very margin heavy side of the business that has like almost like unlimited growth potential. I mean, when you think about the global energy market, it's definitely bigger than the car market. So that's very exciting for us. So yeah, that's kind of how I have one more question for you guys though, actually.
Sure.
That's a short-term question. What's going to happen on 12/9? Oh, is this going to be published after the fact?
Probably, yeah.
Oh, it probably will. Oh, yeah.
Yeah. So, if we were predicting, we think that, small chance there's some kind of split announced, but it's not nothing. We just don't know. Probably more likely than not nothing, but small chance something substantial. What about you, Matt? You think that's about what we think, right?
Yeah, I think we should just go back and post and edit in whatever happened and just post it that way. Make ourselves look good.
I think the SEC might have thought about that.
I've had absolutely, clearly joking. Just can't. I can't make up my own mind of whether I take it seriously or not. It seems like so kind of crazy, and on the other hand, I'm like, okay, like Elon could certainly do something like that. He's more than capable of, being that guy and dropping hints like that.
Yeah, I remember when I was at the Cybertruck event in 2019, and when the glass broke, broke the internet, and then then there was like a theory that they had done it on purpose to create a media frenzy. So I just I don't know, if something happens, that'd be cool. But it's been pretty funny to watch the online Tesla community talk about this. I don't even know where it came from. I don't know if you guys know. Like, it just seemed to bubble up.
Yeah, 12/9. I don't know where that date came from. There was something with the numbers of the shares being sold, like 900,000, 934,000 something. Like, you add up the numbers, it's 12/9/21 or something. But yeah, I think we all know that Tesla is going to have another stock split sooner or later, right? And it's arguable whether now is a good time or not. But there will be a split at some point. I think most people agree on that. It just depends on whether it's going to be soon or down the road. So we'll see.
Yeah.
So Eric, what other, we've talked about a lot of major trends here. Are there any other kind of major trends that you guys are tracking at Worm Capital that we haven't touched on yet that are, disruptions in other industries or other areas of the economy?
Yeah, we're always kind of open-minded. I think sort of our North Star is looking where customers are going and thinking about just the next few years. So in that sense, we're pretty heads down focused on the potential for AR and VR platforms. I think that maybe, we can chat more about that. I'm curious what you guys think on that front. And then, energy broadly, but just all sorts of transportation as well. So we're kind of poking around on a few areas. I think the other big one for us over the next couple of years, other two, I should say, is, disruption across healthcare. I think that there are some really promising technologies that are very interesting to me, and we start also each question with how big is this market, and healthcare is certainly one. And then another area that we've started spending more time on is really the potential for disruption across finance in our business models. I think banking in general could be a lot more efficient, and so whether that's through fintech or some sort of crypto adjacent type of bet. I mean, those are areas that we're focused on. So nothing to really talk about too much in detail just yet. No positions that we're ready to share, but we're working on some stuff right now.
Cool.
Yeah.
All right. Well, thanks so much for your time, Eric. It's been a real privilege just being able to pick your brain for a little bit. I'd encourage everyone listening, check out Worm Capital. They've got a great Nightcrawler podcast. I think is it every Friday that comes out?
The newsletter I do every Friday, but the podcast will be like once a month. I appreciate you guys having me on. It was fun.
How do people get on your newsletter?
Just on our website. It's a easy sign up link.
Okay, we'll put it in the description. Yeah, we'll put it in the description of the video.
Cool.
Okay.
Yeah, and maybe I'll see you guys in Miami.
Yeah, maybe in January. We're planning to go down there for a conference, so hopefully we'll see you down there.
All right, guys. Well, I really appreciate you having me on, and I guess hopefully we'll have you on the Nightcrawler podcast soon.
Good. Cool.
Yeah, it'd be great. Looking forward to it. Thanks, Eric.